Hey guys, you might have heard, but 100% mortgages are back in the UK. Is this a good idea or a terrible idea? What do you think? Jump in the comments and let us know. For today's video, I want to unpack what the announcement is. What's the product? What are the pros and cons of it? What do I really think of it? Would I get it if I was a first-time buyer who is renting, which is what this product's aimed at? First-time buyers who are renting. Would I jump on this if I was in those shoes? I'll be sharing all that and more on today's video. Now, today's video is completely unedited. I've literally heard about this and I thought, you know what, I'm going to jump on, share my thoughts. I've written some notes on my phone, which I'll look at as I go through. Now, when I looked at this online and I listened to the news, you had almost like two camps. On one hand, you had people who said things like, oh man, this is about time they've brought this product in. 100% mortgages, it's overdue. Like, come on, this is so obvious. This should be out and helping the renters. And the banks are positioning themselves, and this one particular bank in particular, and many more will follow most likely, are positioning themselves as we are here to save the renters. Yeah? That's one way of looking at it. On the other hand, some other people are going, oh man, this kind of evokes very bad memories of 2008. Where do you stand? Which camp do you stand on? Are you in that camp of saying, do you know what? This is overdue, 100% mortgages, come on man, this is so obvious, bring them on already. Or are you thinking, boy, history is about to repeat itself? Do you know what I thought about this? I had a different perspective personally. I thought to myself, this is like being invited to a party where the banks are having fun, but you are going to be the one paying for it. Why? Because think about it. Yes, there will be pros and cons, and I'll cover what those pros and cons are. But if you borrow 100% of a mortgage, have you actually thought about what that means for the banks? Think about it from their own perspective. Let me give you some numbers. In the UK, did you know, according to Halifax, the average property price in the UK right now as we speak, in April, is £286,896. That's the average value for a property in the UK. If you borrowed that 100% fully, yeah? Did you know that that works out to be a monthly payment of £1,760? Which you probably go, yeah, I can kind of scrape by and afford it. But did you know that of that 1760, 1,313 of that would be interest alone to the banks? In the first year, you'd be paying £15,613 in just interest. And every single year for 5 years, which is what this product is proposing, for 5 years, you'll easily be paying around £88,665 thereabouts for 5 years. Okay? Now, you probably think, yeah, that's what happens, isn't it? That's what happens with mortgages. But this is what happens when you borrow 100%. Obviously, there's interest you always have to pay when you take out a mortgage and so on. But the point of making this video today is I want to share what the main things are. What's the product? What are the pros and cons? What are the true realities of it? And then, of course, you can make your own decision. Okay? So this product has been released by Skipton Building Society. Okay, they've released this product. And what are the details? Details are, it's a 5-year fixed rate product, and you have to fix at 5.49%. Okay, there's a maximum of 35 years that you can fix that you can get your mortgage for, of which you have to fix for 5 years to begin. Yeah, tenants, that's people who are renting, obviously can borrow up to over 95%, up to 100% of the value of the property they're buying. Yeah, and it says here there are 0 fees, from my understanding. Now, just scrolling along and looking at their website as I look at this, I want to look at who can actually apply for this product. It says each applicant has to be a first-time buyer, aged 21 or over. You have less than 5% deposit, which is probably most people or a lot of people. And then it says, this is very key, it says each applicant has no missed payments on debts or credit commitments, e.g. mobile phone bills, over the last 6 months. So this is interesting. This is looking at your credit. Then it says you want to borrow up to 600k, which is a lot to borrow if you think about it. Up to, obviously. And this is key. Then it says, you meet the household to household criteria. What does this mean? Household to household criteria means that the same people who are renting right now and have been for the last 12 months are the same people applying for the mortgage. Yeah, this is a criteria. Then it says you are not looking to buy a new flat. You can't buy this for new flats. You can't use for new flats. And this is another really important point. It says you have proof of having paid at least 12 months rent in a row during the last 18 months. Okay? Okay, so those of you who've been messing with your landlord and stuff like that, nah, this ain't for you. Then it finally says you must also have experience of paying all household bills, e.g. utility bills, council tax, etc. for at least 12 months in a row during the last 18 months. Okay? So that's who can apply. Okay? And if that's you, jump in the comments. Let me know if that sounds like it's something that you can potentially qualify for. Now, what are the next steps? How do you actually apply? The first step, if you want to apply, and I found this really interesting, is that you go on their website at Skipton, and they have what's known as a track record calculator. This is a track record mortgage, the name of this mortgage. But they have a track record calculator. And I went on there to try it myself. And what you do on there is, they say to you, type in what your monthly rental payment is. You put the amount in, then it says to you over what term, you click calculate, and then it works out for you how much you might be able to borrow. Yeah? So I looked at this and I thought to myself, this is interesting. And I looked at the research in the UK around rents that people are paying outside of London, for example. The average rent paid outside of London is £1,190 in the first quarter of 2023, according to Rightmove. Yeah? Then type that into the calculator and I wanted to see what it would give me. £1,190 per month. Yeah? If you type that in over 25 years, it says you can borrow £193,972. That's how much you can borrow, 193k. Then I'm like, okay, but you can borrow up to 35 years. So let me change the years to 35 years instead of 25 years and see what happens. Again, £1,190 rent over 35 years. It then says you can borrow £221,865. But guess what? Both those amounts are materially below the average value of a property in the UK. Yeah, which I mentioned earlier was £286,896 as at the time of making this video. Yeah, and to look at these numbers in a different way. So that means basically you can't, based on the average rent, they wouldn't even give you enough to buy the average home. That's really what I'm saying. Yeah, but if we look at these calculations in a different way, yeah, and look at the average UK house price over 25 years, you would need a mortgage cost of £1,760, as I mentioned earlier, in order for you to be able to, you need to be able to afford £1,760 per month in order for you to buy the average property price. Yeah. In addition to that, if you manage to save a 5% deposit that can go towards a home, if you can actually save 5%, then that rate that they're offering of 5.49% actually doesn't remain that competitive. Like, you can actually get better rates than that out in the marketplace if you can manage to stomp up 5% of the purchase price of a property. So for example, Atom Bank, as at the time of making this video, are offering rates of around 4.89% for a 95% mortgage. Yeah. So if you can save for the average property price of 286,000, 5% of that is about 14 grand. If you can save about £14,400, choosing to go for a different mortgage provider rather than this current deal could actually save you nearly 6 grand in over the 5 years that you're taking out the mortgage. So why am I sharing all this? I'm not saying the deal that they're offering is not an amazing deal or a great deal. I'm just saying, think very carefully about this, because there's a lot in the media right now that's getting us very excited. This company has gone, they've had that first mover advantage post 2008 and come out with this product. I'm just saying, Let's understand what we're getting ourselves into. Yeah? Now, according to their process on their website, Skipton, once you've done that initial calculation, the track record calculator, what I like is that they then put you through an affordability calculator as well. Yeah? They'll ask you a bunch of questions around your lifestyle, your spending, that kind of stuff, in order to see whether this is something you can actually afford. Yeah? So you've got two calculations, a track record calculator, which says this is how much we might be able to lend you, and then an affordability calculator that says this is how much we might be able to lend you. And then what they do is they take the lower number. So for example, if the first calculator said we can lend you 250k from the track record calculator, and the affordability calculator said we can lend you 300k, what they would do is they will give you the lower number of 250k as what you can borrow. And then from there, they'll give you a decision in principle and that kind of stuff. Yeah, I'm going to link below to Skipton's offer for this 100% mortgage for you guys to go and take a look at in a bit more detail. But what I love in the affordability calculator is that they look at things like your salary, your bonuses, any overtime income you have. So just looking at your income, any benefits you have. If you're self-employed, they want to look at the last 2 years of accounts from your accountant and that kind of stuff, and your net profit, and so on. If you have got a limited company, they will look at your dividends and your other forms of remuneration you might have. And then they look at your outgoings, so your loans, credit cards, existing mortgage payments, and any spending that you might have. Yeah, to work out what your affordability is. Yeah. Now I want to talk about the pros and cons. Yeah, so I've given you like an insight into what the product is, what's currently on offer, and I sound kind of skeptical because I'm always skeptical when it comes to products that are released, particularly during a time like this, by banks telling you you can have all you want to eat, 100%. Yeah. So what are the pros and cons? Let me tell you what I think. Pros, let's start with that. So the obvious pro is that you get on the property ladder. So if you're someone who's renting, you're like, do you know what, Ken? I'm drowning in all my rental payments. I want to get on the property ladder. That's great for you. You get on the property ladder. Yeah? Tick. That's a great pro. The next pro is that you have the option, of putting down up to 5% deposit for this particular product. Yeah? So you might say, do you know what? I don't want that all you can eat 100%. I want to pay put down 5% maybe, or up to 5%, and that's good. That's a pro. That's a good thing, because you have a bit of equity, you have a bit of skin in the game, as it were. You're not like borrowing everything. Now, that's all I can think about from a pro perspective. There are probably others, but the cons really stood out to me because we should approach these things always with a bit of caution. The obvious con, I'm sure you're probably thinking about right now, is the problem of negative equity. Yeah? Because if you've got zero deposit and you're borrowing everything in an economy where property prices are like literally doing this and this every time, and property prices still remain fairly high and people are predicting they might still come down, you face the problem of actually owing more than the property is worth. Hence, negative equity. Yeah, that's the first con I've got. The second con is that 5.49% for 5 years. 5 years, people, is a very high rate for a repayment mortgage, given property prices still remain quite high. Yeah, if you've got an average, as I mentioned earlier, of 280 something K, like that's just average, right? I mean, that is high, for an average. Although obviously things have come down and what have you, the property prices are still high depending on where you look. The third con is that someone who is currently renting and able to afford their rent right now has to then take on the additional cost of owning a home. Owning a home ain't a joke. There's a lot that happens. And at the moment, you probably say to your landlord, you just make a phone call and say, hey, look, the boiler's broken. Or like something, there's a leak, and they come and fix it. But now you have to do all that stuff. You have to really think about that. In addition to paying the bank their interest, you have to take on so much more responsibility. And you might be able to do that. That's fine. I'm just putting it out there to you, okay? The next con is that, as exciting as it sounds, many people will not be able to meet the affordability criteria. That's just facts. A lot of people wouldn't meet the criteria because they have to be pretty strict, and that's good because things like this get too many people too excited and they borrow way more money than they need to borrow. Okay? Then the final con I've got here is that the track record mortgage by Skipton cannot be used in conjunction even with any other borrowing schemes like first homes, help to buy, shared ownership, and things like that. Okay? So I've given you the pros and cons. What do I really think? What do I really think about this product, 100% mortgage? And would I get it? Because that's really what matters. That's what you want me to tell you. Would I get it if I was in your shoes as someone who's renting and as someone who's a first-time buyer? First thing I'd like to say is that I really like the strict criteria that they've got on the product. I think it's great. For example, they said you have to have proof of having paid at least 12 months of rent in a row during the last 18 months. Yeah? Because that's checking your track record. And the second thing they said, you must also have experience of paying all household bills, e.g. utility bills, council tax, for at least 12 months in a row during the last 18 months. You might think that's a bit strict, but I actually think that's a good thing. Yeah, because it means that, like, you know, we're not going nuts. We're borrowing wildly like we did back in 2008. Now, would I get this product if I was in your shoes? Here's what I would say that I think the product serves certain people. For some people, it's a good idea. And for a lot of people, it's not such a good idea, potentially. Yeah. But I would get this product under certain circumstances, and here they are. Number one, if I really want the security of owning my own home, then I would consider this very strongly. I say this because owning a home is great, but it's not for everybody. Some people can rent and should rent and probably would do better renting. Yeah, that's number one. Number two is if I can afford it comfortably. Number three is my third condition for actually taking up this product is that I'd move out there somewhere. A place where property prices make some sense relative to rents. A place where I wouldn't have to borrow so much money, because I tell you people, borrowing that money is real. You try missing a payment on your mortgage and see what happens. These banks will come after you. They will come after you. So I'm saying I would want to borrow sensibly. Personally, I'd move out somewhere where I can get a decent property price. Therefore, I'm not over borrowing. That's my third criteria, personally. My fourth criteria for taking this on is I would get myself income protection insurance. So that if things went down and I couldn't earn that money anymore for any reason, I fell ill and what have you, I've got some protection. Because a mortgage is no joke. If you're renting, you can say, oh, actually, I want to move out now. I'm moving to my parents' house. You can maybe serve notice and do whatever. You have more flexibility. But the mortgage, that's a whole different ballgame. Yeah, you own that debt hangs around you and it will go with you wherever you want to go, unless you obviously sell the property. Yeah. The next condition I have is that I will only go anywhere near this thing if I have enough left over in my budget each month such that I can overpay. 5.4%, 5.49% fixed for 5 years is no joke, people. And 5 years is not just, obviously we know it's not a day, it's not 2 years, it's not 1 year, it's a long time. Take your age right now and add 5 years to it and see how old you be when that fixed rate comes to an end at 5.49%. So I would want the option to overpay, which means I would want some flexibility in my budget so that I can make those overpayments and actually get some equity in my property. And then the final condition I'd consider is I would do this and get this 100% mortgage if I'm at a stage in my career where I can foresee growth in my career. And obviously with growth comes a growth in my income potential. Okay? With all those things added together, I'd say overall that I've made this video to really caution us. This is about caution and not overstretching our finances. Okay? Obviously 100% borrowing is a lot. And I'm not saying to you, don't do it. I'm just saying to you, think carefully and make the right decisions for you. Yeah? I personally wouldn't get 100% just like that. I'd want at least 5%. That's what I would do. And then my goal would then be to focus on overpaying and choosing very carefully where I'm buying as a location, why I'm buying, and think carefully about my own family needs and that kind of stuff before I actually get into it. But what do you think? Those are my points for this video. What are your thoughts about the 100% mortgage? Is it a good idea? Is it a bad idea? Is it in between? Would you get it? Would you get the 100% mortgage if you could? I want to hear from you based on everything I've talked about today. Please jump in the comments and let me know. If you enjoyed today's video, appreciate it if you hit that subscribe button. That just helps our channel to keep growing and getting our message out to help even more people on their journey and in their finances. Thank you guys so much for watching today's video. And as always, in all things, be thankful and seek joy. Take care, people. Bye for now.